In this video, we'll show you the easiest, hassle-free approach to buying US Treasuries. You'll still get a great return, but you also have the option to cash out whenever you want with no penalties. Best of all, your money earns compound interest every single month, and you don't have to worry about buying the best T-bills to earn the highest rates. So without further ado, let's dive right in. First off, we have to talk about treasuries. This is when you lend money to the US government. In return, they'll offer 4 to over 5% APY, and the interest you earn is exempt from both state and local taxes. And this makes treasuries incredibly popular as short-term cash investments, and they can even be safer than FDIC-insured banks. But one of the biggest downsides is that it's kind of a hassle to buy them. For example, if you go through Treasury Direct, you gotta log into this clunky, outdated website, and you have to deal with auction dates, issue dates, and a settlement period where you're not earning any interest whatsoever. Going through a broker is a little bit easier, but you have to purchase in $1,000 increments, and the yields tend to fluctuate every single day. So is there a better alternative? And for a lot of people, the answer could be a nice Treasury money market fund. You'll still get the benefits of treasuries like great rates and tax savings, but you'll also have the option to cash out with no penalties. These funds are not FDIC insured though, but they are highly regulated by the government and the SEC to invest only in short-term, low-risk investments like treasury bills, notes, and bonds. These funds often follow the federal funds rate, so their yields continue to increase every single day, with the target being around 4.75%. They also try their best to maintain its value at $1 per share. So if I deposit $1,000, I get 1,000 shares. It's not guaranteed to hold its value at $1, but generally speaking, it's very rare for people to lose their capital. For context, money market funds hold about $3 trillion in assets under management, and they are carefully monitored by the SEC. And what's particularly amazing about these funds is that there's compound interest and no penalties for cashing out. These funds pay interest at the start of each month, and your money is automatically reinvested to earn the highest rates possible. And if you want to cash out, you can sell your shares at any time and receive your funds within 7 days. And overall, Treasury money market funds are extremely popular for great rates, tax savings, and high liquidity. So with all that said, let's talk about some of the best options right now. And coming in at number 1 is the Schwab US Treasury Money Fund, ticker symbol SNSXX. This is managed by Charles Schwab, one of the biggest brokers on the planet. This fund has over $8 billion in assets under management, and all of it is invested in US Treasuries. The annualized yield based on the last 7 days is 4.22% APY. It's worth noting that this yield is backwards looking, and the interest is only paid once a month. If you're subscribed to this channel, you know that treasury yields are forward looking and that rates have been climbing throughout February. Therefore, the real annualized yield of this fund for March is probably much higher at around 4.5 to 4.6%. And because 100% of its assets are invested in US Treasuries, all of the interest you earn is exempt from both state and local taxes. The only major downside to this fund is the expense ratio. It comes in at 0.34%. For context, for every $10,000 that you deposit, you're paying $34 every year in management fees. And this is the price you pay to have someone automatically buy treasuries on your behalf and give you that no penalty cash out option. Now, for some people, this isn't worth it. They can earn 4.56% on average by spending some time and managing their own treasuries. But for a lot of other people, this could be worth the price tag. Yes, you're giving 0.34% to Charles Schwab, but you're still getting a nice 4.22% APY. Plus, you don't have to worry about future treasury yields or buying at good prices. Instead, they can spend that time and energy doing something that they might find more productive or more fulfilling. And at the end of the day, it is personal finance. There's no right decision for everyone, and what works for me might not be what works for you. But this Schwab US Treasury Money Fund could be a very solid option for people who want to earn high yields but don't want to spend too much time managing their own finances. And at number 2 is the Fidelity Treasury Only Money Market Fund, otherwise known as FDLXX. This is a bit smaller at $3 billion in total assets and has a 7-day yield of 4.16% APY. Again, the real return is likely a bit higher. It's important to note that 95% of its assets are invested in US Treasuries. The remaining 5% is in repurchase agreements. These are essentially IOUs between banks for trading treasuries. They're generally considered extremely safe, but they are taxed as ordinary interest, meaning that only 95% of the interest you earn from this fund is exempt from both state and local taxes. 5% of the interest does not get this preferential tax treatment. To be honest, 5% isn't really a big deal either. Fidelity also does the calculations automatically for you, so there's no additional work that you have to do during tax season. That said, it's still worth noting. But the biggest downside is still that expense ratio, and this one is higher than Charles Schwab at 0.42%. So for every $10,000 that you deposit, you're paying $42 in management fees. Again, you're still paid 4.16% APY, but there is an opportunity cost for that active management. And finally, at number 3 is the Vanguard Treasury Money Market Fund, ticker symbol VUSXX. This is by far the largest at over $39 billion in total assets with a 7-day yield of 4.56% APY. And again, the real return is likely even higher. Now, the expense ratio is the lowest at just 0.09%. So for every $10,000 that you deposit, you're paying only $9 in management fees every year. And because that expense ratio is so much lower, the overall yield is significantly higher than Fidelity and Charles Schwab. Vanguard, of course, is a champion of low expense ratios, so a lot of investors like me really love their Vanguard mutual funds. That said, there are 2 notable downsides. The first is that the minimum deposit is $3,000. Not crazy high, but that's still quite a lot, especially considering that Schwab and Fidelity both have no minimum deposits. Now, the second is much more important, and that is the portfolio composition. About 72% of its total assets are invested in US Treasuries. The remaining 28% is invested in repurchase agreements and other US government debt. And this 28% is generally taxed as ordinary income. Therefore, only 72% of the interest you earn from this fund is exempt from both state and local taxes. And on the side of Fidelity, 5% isn't really a big deal. But for Vanguard, 28% is pretty significant. They used to be a fan favorite when 100% of its assets were invested in US Treasuries, but they've changed that portfolio since 2022. That said, Vanguard's VUSXX is still a wonderful option and the highest yielding one, although nowadays there's a bit of an asterisk to it because a good portion of the interest does not get that special tax treatment. And at the end of the day, I'd love to know your thoughts and whether these Treasury money market funds are appealing to you. As always, have a great rest of your day and take care. I wish they didn't charge so much though, to be honest. I guess they gotta pay their bills, but 0.4%? It's kind of a lot. All right, goodbye.